Hello and welcome to another equity development interview. Today we are joined by Mark Bartlett, CEO of Strix PLC, who have today announced a trading update. And goodness me, I mean, Mark, what a year. And yet Strix looks like it's navigated it in rude health. Your order book has delivered 2% growth in adjusted profit after tax. So what's this growth been down to?
Yes, thanks, Hannah. It's been a really good year, actually. We've had very strong sales since June, and that's really been driven by a combination of replenishment of the pipeline stock from the first half of the year, and then a very, very strong seasonal uplift. It would seem that a lot of people like yourselves are all working from home, and they're all taking the benefit of drinking a little bit of extra tea, which is very positive for us. We've sort of seen this continue into the new year, which is obviously very positive, and we have a strong order book now for Q1, which really underpins the board's confidence going forward. We do really have a high quality, resilient and robust business model, which benefits from both geographic and the product diversification. And last year, we put a lot of focus on efficiency measures and strategic initiatives to really manage our highly variable cost and really allowing us to prudently invest in some quite compelling growth opportunities.
Well, of course, one of the compelling opportunities you saw last year came in the form of your acquisition of Lica, which, for those that need reminding, you paid just 11.6 million euros for. Now, buying a business in Italy in the middle of a pandemic is extremely brave. How have you found integration given the restrictions on travel? And has it hindered the speed and pace at which you're able to progress the opportunities for the business?
A very good question. Well, here at Strix, we like a challenge, and things have actually progressed really well with Lica since that acquisition, and we are working really hard to maximise the various opportunities identified. Obviously, a lot of calls going on with Zoom and Team and so on, and daily calls with the management there. I mean, Lica itself has an exceptional team who have delivered double-digit revenue growth through that pandemic last year, and like Strix, they have had a very, very good start to the year. Based on prior year alone, this will bring a revenue growth of around 20% to Strix Group in this financial year, even without any of those upside opportunities. So we're very, very positive about the future with Lica, and things are working very well for us with them.
Well, if we're looking at other interesting opportunities, obviously there's been some developments as well with your HaloPure technology in recent months. I think probably highlighting the growth opportunities as opposed to perhaps the income story that you came to market with all those years ago. You had a contract win with the Thai Group, which I suppose neatly illustrates the opportunity that you're seeing in agriculture. And I know you've also mentioned dental. Where do you see the opportunities for this technology over the next 12 months? Will they remain focused in these two verticals?
Yeah, this has been quite an exciting development since the acquisition of HaloSource. And whilst it really is quite early days for the technology, we are certainly starting to see some gain in traction in China. I mean, our focus at this stage is very much on the farming opportunities identified, as this represents an estimated £500 million addressable market. So really, we're just touching the surface at the moment, with plenty of opportunity to go for in the longer term. I mean, there are other opportunities, as you mentioned, dentistry. We have licensed the technology in China for dentistry, and there's some other sort of healthcare applications that we will be looking at. But right now, farming is by far the largest opportunity in the short to medium term.
Well, if we look, take a further look then at China, obviously that is where the majority of your manufacturing facilities are. Are they looking robust in a post-COVID world?
Yeah, at Strix, we now have 3 geographical locations for manufacture: China, Isle of Man and Italy. Obviously, China is the largest site, and it has performed extremely well throughout the pandemic. And actually, we only had 3 weeks of closure back in Chinese New Year last year, which was the height of the pandemic. Since that time, our factory in China has run at 100% with really minimal disruption from our supply base. So things have worked out very well. We have very, very strict measures within all of our factories as to how we operate and protect our employees. And these have been very successful and actually very well received by our employees so far as well. As you will see, any potential risks within China are dealt with very, very swiftly by the local governments. And from our experience over the last year, This is a very, very robust location for manufacture. It's also probably worth highlighting that our factory on the Isle of Man has also been largely unaffected by the pandemic and continues to operate with very minimal disruption.
Well, as we think about manufacturing in China, then obviously the new factory is scheduled to have an opening ceremony, I believe, in October this year. Let us all hope we can travel and get there for it. But is it running to budget and on schedule at the moment?
Yeah, our team in China have done an absolutely excellent job on the new factory, and we are really excited about this project, and I really do hope we get out there for the opening in October. I'm pleased to say we have now finished all of the construction of the building, and we've actually secured approval from the local government audit as well. The project remains fully on track and on budget and will be operational by August 2021. We will actually start moving some of those production lines as early as March following Chinese New Year. Just as a reminder, the new factory will actually double our capacity, with our operating costs being the same or even actually slightly lower than our current facilities over in China. And credit really has to go to the team, who are doing an exceptional job to deliver this project on time.
So despite keeping the factory on track and all the costs that involved, you still managed to reduce debt quicker than anticipated in an extremely challenging year and stay on track with your progressive dividend payments. How have you managed this, Mark?
Yeah, your net debt was lower than previous guidance for the financial year, having successfully implemented a range of efficiency measures and strategic initiatives. Given the group's performance in 2020 and the board's confidence in the continued strength of our cash generation, we have confirmed our intention to pay a total dividend of 7.7 pence per share in respect of the 2020 financial year. That's inclusive of the 2.6 pence we paid as an interim dividend. And the board remains very much committed to that progressive dividend policy. The policy itself is linked to underlying earnings, and it's been maintained, reflecting the board's confidence in the outlook for the group. We also have a very conservative balance sheet and low leverage, which provides us very good financial flexibility for the medium term.
Well, that financial flexibility, Mark's going to be, I suspect, an important element towards helping you achieve some of the goals you laid out at your Capital Markets Day in November last year. Obviously put some ambitious targets into the marketplace then around growth and the expectation that you should be able to double revenues in the next 5 years. I mean, today's update looks to set you well for this, but will you need the input of additional acquisitions to reach this target?
Yeah, a very good question. And we're obviously very confident of our sort of longer term objectives as we set out in the Capital Markets Day. We can achieve these numbers primarily through organic growth in the water and applications category. We will, of course, continue to grow our market share in the kettle controls as well. We continue to seek appropriate acquisitions, and when that right opportunity presents itself, we will invest in compelling growth opportunities, with particular focus on new product development and a commercialization strategy that supports our medium-term growth ambitions. Of course, executing on our ESG commitments is also extremely important, and we're aiming to provide a safer, sustainable future for our customers, which is a key element to supporting this growth. We see this as a key priority, as we know it is a consideration which will continue to grow for our end customers and for our OEM partners, as well as an important consideration for new investors in Strix.
Well, thank you very much for joining us today, Mark. I know results are due out at the end of March, and I hope that we will have an opportunity to put you in front of investors directly then. But in the meantime, thank you and keep up the excellent work.
Thanks very much, Hannah. Very much look forward to it. Thank you.